It's probably the most common question I'll get is like, should I invest or should I pay down the debt? And as you mentioned, obviously it's very much, it depends. It's very nuanced. Not all debt is created equal, right? Some debt is secured to an asset. Some debt is unsecured. What is the credit position? I mean, there's a lot of things that go into that. So at a high level, the things that I'm thinking about are as follows. First of all, what is the interest rate on the debt that we're talking about? Right? Because we can't look at all debt equally. If you have let's say a 3.5%, 4% undergrad subsidized loan versus an 8.4%, which is what they were last year, unsubsidized graduate loan, we can't treat those the same, right? Because, if you look at the historical rate of return of the stock market, net of inflation since the Great Depression, we're hovering somewhere around 7%. Now, typically somebody's not going to have a 100% equity portfolio, but think about that number, right? So if I have debt at 8% or 9%, 10%, some of the private loans, credit cards, 20%, right? If I have debt that's significantly higher than that, then often that's going to really incentivize us to really want to focus on the debt for a couple of reasons. One, it's just a math equation. But the second, there's certainly an emotional piece and factor there as well. But also what we need to consider is that one is known and one is not known. What do I mean by that? If you have an 8% student loan and you pay it off, we know what we're getting. If you put money and invest it, the market might go up 12%, it might go down 15% or anywhere in between or higher, even lower, right? So you can't just look at that number I gave, historical rate of, the market net of inflation, 7%. You can't just look at that in isolation because we have to almost factor in like some risk in that as well. So this is not advice, but personally, I kind of look at probably somewhere around like 5% as a line of demarcation. What do I mean by that? If I have debt north of 5%, I'm probably focused on paying off the debt. If I have debt less than 5%, I'm at least looking at, is there any advantage of paying this off early or not, right? Might I be better off investing or doing other things? And obviously that can also depend on where are you at with other parts of the financial plan. So there's the interest rate, but then there's a piece that a lot of people forget, which is the emotional question of how do you feel about the debt, right? And there's no right or wrong answer to this. And I think this is where a lot of financial planners try to get out the calculators, the spreadsheets, and they probably even project a little bit of their own feelings without necessarily accounting for the feelings of the individual. And the way I'll ask this question, Ike, is like, if we look at this debt, let's say it's student loan debt, where are you at on the student loan debt paying scale, right? If 10 is like the house is on fire, I'm overwhelmed, I'm anxious, I can't sleep at night. And then if we look at the other end of the spectrum, let's say 0 is like, meh, like it is what it is. It'll kind of take care of itself eventually. Like, where are you on the 0 to 10? So there's this combination of math and emotions that we need to factor in.